Hi guys, my name is Fred King, and today we will cover one of the hottest topics in crypto space, which is Bitcoin price predictions. Within the last few weeks, we saw extremely positive news like MicroStrategy's $500 million investment, followed by Square's $50 million investment. And of course, one of the main Bitcoin price drivers was PayPal's announcement of support of crypto assets on their platforms. Bitcoin already hit $13,500 benchmark and is still very bullish. So in this video I will share with you top 8 Bitcoin price predictions by the crypto industry experts. Let's get started. First on the list is Ari Paul, the co-founder and CIO at Block Tower Capital, a leading crypto and blockchain investment fund. Let's take a look at his prediction.
As the US and governments around the world become increasingly indebted, as their debt to GDP ratio goes from 100, 150%, 200%, 300%, there's no one to bail them out. There's no next entity you can push that debt to. So at some point, I think probably fairly soon, there's only two choices. Either a country like the US has to default on its debt, or they have to very openly print away the debt. And as an investor, if you know that the US government can't pay its debts in current dollars, that the only way they can pay their debts is by devaluing the dollar, if you know the only way you can get paid back is by the government devaluing the dollars, then your actual return is going to be negative because they're paying you back, but in dollars that are worth less. So what do you want to do then? Well, you start thinking about maybe I should own gold, maybe I should own Bitcoin, maybe I should own other types of assets that are resistant to central bank depreciation. The Federal Reserve right now is buying corporate bonds directly. The Federal Reserve owns a chunk of Apple bonds, which is crazy when you think of it. It's unprecedented. It really is kind of crazy that the Federal Reserve is now the single largest investor in the world in public markets. You as an investor are now competing directly against the Fed when you're trading bonds. So at some point when investors fear inflation or fear depreciation of the dollar so much, they say, okay, we understand that the Treasury is promising to pay us 2%. We understand the central bank is promising to buy these Apple bonds, but we don't want what they're going to give us. We don't want the US dollars because we're afraid that those may start inflating away at 10% a year or 20% a year. That's the point where it breaks. And I don't know that it's going to be a moment. In some countries like Weimar Republic Germany, like Zimbabwe, like Venezuela, you get a fairly clear, over the span of a quarter, suddenly you have rampant hyperinflation. I'm not really predicting that here. I think what's very plausible is we may get something that feels more like the 1970s, that feels more, the 1970s, the US banking system didn't collapse, the US markets didn't collapse, but we had severe inflation. We had, 15, 16, 17% inflation, and that repriced everything. So that was calamitous if you were an investor, because if you owned a treasury bond that was yielding 2%, and suddenly inflation 17%, the value of your 10-year treasury bond, I can't do the math in my head, but it falls 20%. And that's, for treasury bonds, that's insane. For a pension, suddenly all of your liabilities are underfunded. Suddenly you're basically insolvent if you're a pension fund or someone with fixed liabilities. So my bet is not that the US kind of way of life is going to collapse, or even that US banking will collapse. It's more that if we have a return to something like 1970s, I think probably gold rallies 5 to 10x or more. I think Bitcoin probably rallies 10 to 30x or more.
His vision is that during mass inflation, Bitcoin price could go up 10 to 30 times, which could be $130 to $390 per Bitcoin. Next on the list is a famous venture capitalist, Tim Draper. His venture fund invested in many successful companies like Skype, Twitter, and Ring. He's also a huge Bitcoin maximalist who owns 30,000 Bitcoins. According to his price prediction, Bitcoin should hit $250,000 by the end of 2023. And if Bitcoin does not hit this mark, Tim Draper jokingly said he would eat a raw egg. Next on our list is a famous financial broadcaster, Max Keiser. Let's take a look at his prediction.
With gold now, the next alternative, hard money, would be, aside from silver, of course, is great, but aside from that would be Bitcoin. And that's why you see some great interest in Bitcoin right now. The price is up this year. It's one of the very few markets in the world that's up, and it will achieve a market capitalization similar to gold in the many trillions of dollars. So you're talking about a $400,000 price is my target ultimately for Bitcoin, and it looks great.
His target is 400,000 per BTC. The main reason behind it is his comparison of Bitcoin to gold. Current market cap of Bitcoin is $250 billion, while gold market cap is $9 trillion. You can do this simple math by yourself. The next on the list is a Dutch institutional investor, PlanB. Let's take a look at his Bitcoin price prediction.
I started with the numbers. Of course, Bitcoin is a different animal than the things I normally model. So there's no cash flow like a company or a fixed income instrument or a derivative. It's a bit like gold. It's just there. How do you value it? In fact, the same problem is there for gold as well, because you could, of course, look at the cost of mining of gold or Bitcoin. I just went with the digital scarcity idea. Also, after reading Saifedean Ammous's book, The Bitcoin Standard, he has a whole chapter in there about stock to flow. And stock to flow is, of course, also known in the commodities world, gold, silver. So I use that as that stock to flow measure as a quantification of the scarcity, and then use that as an input in a valuation model. So maybe for the listeners who don't know, stock is the reserve, the amount of Bitcoin or the amount of gold that's above the ground, that is just there. And flow is the yearly production. And then you just divide the two. Bitcoin, you have 17 or almost 18 million Bitcoins right now. 750,000 per year are added. That number is rapidly declining, by the way. But if you divide those two, you get a stock to flow multiple of 27. And what I discovered was that the stock to flow number is correlated with the market value. So, for example, the stock to flow of gold is 55 or something, and the market value is about 10 trillion US dollars. If you put all those stock to flow numbers of all the commodities out there and put them on a line, you get this straight line. It's actually a power law with a super high R squared, super high correlation. It's just amazing. So there's actually two models out there. So there's the cross asset model where it all started with gold and silver and that's that, etc. But there's also the time series model where if you plot the stock to flow time series of Bitcoin of the last 10 years against the market cap, you can also see the correlation there and measure the correlation. And it's also really high, like 95%.
Well, I know personally, whenever I read it, I was like, this is it. It's about time somebody has put what I felt was happening, but didn't know how to describe it, right? And I think a lot of people in the community had this intuition that what you were describing and what you were actually applying mathematics to was happening, but we just didn't know how to describe it. And so here you come into it and you start describing it. For people that are not familiar with R squared values, describe what this is, describe what it means whenever you model something, and then the actuals compared to what the projections were, what that means.
R squared is a statistical measure for goodness of fit of a model. So if a model fits really good to the data, like perfect fit, it has a high value, 100%. And if there's no fit at all, it's 0. If you look at the numbers for the cross-asset stock to flow model, 99.5%, that's like almost a perfect fit. That's amazing. I've never, ever seen that before. And if you look at the 95% of the time series stock to flow model, that's also very, very high. So it measures the amount of variance in the price, how much of that is explained by the amount of variance in the stock to flow. And in fact, it's not the most important measure. There are other measures, but it's a frequently used measure. So that's why I use it. The halving is a very important thing because every 210,000 blocks, that's about 4 years, the subsidy that miners get when they mine a block is halved. From an investor's point of view, the supply is halved. That doubles the stock to flow measure and increases the value as well. So especially those stepwise nonlinear function is very, very interesting because markets are anticipating on it. There's a lot of debate and narratives always around halvings. But if you look at the numbers, so we're now at a stock to flow of Bitcoin of 27, and that gives a value of, well, about a little under $10,000. So we're about there, a little bit over right now. But after the halving, if the stock to flow doubles, that's in May 2020. So that's 8 months away. Very interesting, very, very awesome event. The stock to flow doubles, but the value of Bitcoin goes 8 or 10x. somewhere between, let me give a rough range, somewhere between 50 and 100K, starting somewhere after May next year. 4 years later, there's another halving. In 2024, the stock to flow will go to 100, something we as humans have never seen before. Spectacular moment in time. And the value that goes mathematically with an asset that has a stock to flow of 100 is somewhere between $400,000 and $1 million per Bitcoin.
His price prediction is $50,000 to $100,000 by the end of 2021. According to PlanB, in 2024, Bitcoin price will go beyond $100,000. And he believes that BTC will eventually reach $400,000 and even $1 million. Next on our list is an American entrepreneur and investor, Anthony Pompliano, who recently debated with the famous stockbroker Peter Schiff. They debated on what will go higher, Bitcoin or gold. Let's take a look.
I actually said I thought gold was going to go to $2,000 to $2,500, right? That was kind of the range that I thought it would end up in. Looks like it's heading in that direction. I may be conservative. It may go higher. I'm not sure. Yeah. But with Bitcoin, I think that there's a 10x or more over the next 2 years. Commodity value that gold has. There's no denying it. Yes, you can turn it into jewelry. You can do a whole bunch of other things that you usually don't talk about with gold, right? In terms of there's intrinsic value to gold in terms of the commodity aspect. But there is also a digital commodity aspect to Bitcoin, which is the most defensible or the strongest computing network in the world. And when you look at that, Bitcoin has grown at a compound annual growth rate of over 30%. Right.
But Anthony, all of that is counting the bubble years, right? The years of the bubble. I granted.
No, it's just from the day it started to today. Let me ask, here's a great way to show Bitcoin.
Right,
but a lot of how much gold was taken out of the ground today?
How the hell do I know?
Okay, I know how many Bitcoin were created today, and I can prove it. There's 900 Bitcoin created today.
Yeah, I get all that, but
how much gold is in existence?
Right. You know what, Tony? Here's a point. So let's say that in 2 years, right, Bitcoin is at 1,000. Let's just say that, right? It's at all the way down to 1,000, and gold is at 3,000. You'd still be able to make the argument that since Bitcoin started, it's beating gold. You can make the exact same argument you're making now and say it's the best performing asset of the last 12 years, whatever it is. It has this great return, but it would only be 1,000. See, because
Bitcoin has been around for 11 years, and I forget the exact number, but it's like if you bought Bitcoin and held it to today at any point in its lifetime, other than like 100 days out of that 11 years, and you held till today, you would be up. So if you bought in one of the 100 days out of the last 11 years and you held to today, you might not be up. But again, the whole key to this is, do you think that we're more likely to go to a gold standard or to a Bitcoin standard when the dollar fails?
Oh, way more likely gold. I just don't see.
The beauty of Bitcoin is when you try to forecast price, there's supply and demand that goes into that. We know with 100% certainty how much Bitcoin is in circulation. And we know that every day right now, 900 Bitcoin are getting created. And so all you have to do is you have to look at the demand side. And demand continues to rise for an asset. Gold is scarce, but it's not artificially capped, right? There's unlimited supply of gold, but it's scarce.
I agree with you that the supply of Bitcoin is finite, assuming you ignore all the competing cryptocurrencies and all the forks and stuff like that. But so you know exactly what Bitcoin supply is going to be.
Yep.
What you don't know is what the demand is going to be, because
you don't know what the demand
will evaporate.
Gold's demand could evaporate.
Yeah, well, it hasn't evaporated in thousands of years. Why would it evaporate now? In fact, I think
Bitcoin's demand hasn't evaporated in 11 years. Why would it evaporate?
That's not a long enough time horizon.
Why not?
Because that's nothing. You're a young man. I mean, 11 years is nothing, right?
Okay, so what's enough years? 20 years, 50 years, 100 years, 1,000 years?
Well, yeah, 100 years sounds pretty good. But I mean, Bitcoin hasn't been around for cycles. It hasn't gone through booms and busts.
Yes, it has.
No, it hasn't. It just started.
It started in 2008 in a bust.
No, it started
went through a
after
bull
that.
market, and now it's in another bust. It's a full market cycle.
It didn't start until after the '08 crash, right? I mean, it came on the scene after the financial crisis, and it kind of, and then it went up.
What's the market cap of gold?
I don't know what the total market cap is. I forget.
$7-8 trillion somewhere in
it's
there.
much bigger than Bitcoin's. I know that. I mean, many.
Let's say that it's $7 or $8 trillion, right?
It's still small compared to the world equity markets or the currency.
Of course, but let's just say gold's somewhere between 7 to 9 trillion. Let's just say, right, somewhere in that range. Bitcoin's at 200 billion, right, give or take.
Yeah.
Do you think that there's 20% chance that Bitcoin's market cap rises to gold's market cap?
No, I think the chance is way lower than that.
Okay, what would you say the percentage chance is that Bitcoin's market cap reaches the equivalent of gold?
Oh, I mean, it's under 1%. I don't know how low. I just think it's a very, very pie in the sky, bet. I mean, am I saying it's impossible? Well, shoot. I mean, aliens can come down from outer space, right? Nothing's impossible.
The aliens may be here based on the New York Times. Relax. With Bitcoin, I know with 100% certainty and can prove to you that there's only going to be 21 million. And I can show you and prove to you that today only 900 Bitcoin are created.
All right. So I would say that from here, if gold goes up to 2,500, which is $600 or $570 higher than it is now, right?
Which would be only it would be like a 30% return.
Right. I think that my gold and silver stocks will triple, or at least double. I'd say double from here to minimum, right? So that's not bad. That's not bad.
People in the big, okay, that's not bad.
So do you think that, so for Bitcoin to do that, it would have to get back to 20,000 next year?
I think that Bitcoin is going to do, it's going to hit $100,000 by the end of next year.
So Anthony is targeting $100,000 by the end of 2021. Only time will show if his prediction can come true. Next Bitcoin maximalist on the list is Preston Pysh. Let's take a look at what he says about Bitcoin and its price prediction.
I just think that you are at a point in the global economy where reality is starting to separate from fantasy. And what I mean by that is today, 23% of all bonds in the entire world, which you could roughly say the bond market is nearly $100 trillion. It makes the stock market look like a pimple, right? So 23% of all bonds in the market are negative yielding. So when I explain a negative yielding bond to somebody, I say it's the same thing as a contract. So, Toby, will you sign a contract with me that you give me $100 and I guarantee next year I will give back $97? That's what a negative yielding bond is, right? And there's, I think, around $15 trillion worth of negative yielding bonds. So when you think about how insane that is, that people are literally signing contracts that guarantee them to lose money. Guaranteed. You're signing a contract to lose money. To me, that just does not make any sense whatsoever. I think that this problem is not necessarily in the bond market, it's in the currency market that's driving this. I think that there is a deep systematic problem with fiat currencies that go back clear to the 1970s when a gold standard was, I'll even go back further than that. You go 1944 to Bretton Woods, right? This is when the U.S. says we're going to peg the dollar to gold, and then all these other nations say, well, that's great, we'll peg our currency to the dollar, and boom, we'll have sound money, and we can all conduct international exchange in a fair manner. And if you spend more than you raise through your tax revenues, well, then you're going to pay the price for that because we're all dealing with sound money. So this all worked. The U.S. manipulated their money multiplier up into the 70s, and then we couldn't make good on the gold promises. The promissory, you bring in paper money and we'll swap it for gold. So that all fell apart. And so when the U.S. came off the gold standard, interest rates were extremely high. They continued to go higher into the early 1980s. 1981, the 10-year Treasury peaked at 16%. And so this was the point where even though you come off of a gold standard, you can continue to make your economy progress forward without any incident as long as you have positive interest rates. Well, what happens around the globe, everyone starts manipulating their
They debase their currency in order to create growth inside of their domestic currency. And long story short, you have that progress for 40 years until all interest rates start approaching zero, and now they're even going negative. And there's an incentive now for people to take their cash and stick it in a safety deposit box because they'll get a higher return than actually negative yielding percent. That's why I think we have a major systematic failure of fiat currency, not just in the US, but globally. And so whenever I look at how is that going to be solved, and are countries incentivized to solve it? And I think the game theory on countries solving this is there isn't any. They have no incentive to solve this. They have an incentive to manipulate their currency even stronger than the country standing next to them. So when I look at that game theory that everyone's incentivized to devalue their currency so they can manipulate and create growth inside of their own domestic country, I say, okay, is there something that is decentralized that could potentially fix this or peg this? And so for me, that's Bitcoin. It'd be really, really hard for me to get into all the technical arguments from how the technology works for a discussion like this. But for me, I've done a lot of homework on that and how it works and the network effects that take place and how it will ensure that there's 21 million Bitcoins in the future because of game theory and all the participants wanting to keep that number fixed because they're incentivized to keep it fixed. So what you effectively have is digital gold through Bitcoin. The reason I think that it's really advantageous to own it right now, opposed to any other point in time, I think right now, the miners that mine Bitcoin, it becomes twice as hard for them in order to mine the same amount of Bitcoin. They get half as much Bitcoin for the same amount of work that they were doing. This drives the price up. The two other 4-year halving events that have happened in the past, one back in 2016, another one back in 2012, has driven the price like wildfire post-halving. After the halving event, it typically goes crazy for, call it, another 460 odd days. So with that on the horizon, with that coming up, with everything that's happened globally with the economy right now, with all the negative interest rate bonds and there really being no incentive to hold such a security, I think that Bitcoin is going to have a meteoric rise by the end of 2020. And I think it's going to have an even bigger rise in 2021. I expect to see this at the end of 2020 where the price starts to run away. And then what I think you get is you get speculators that come in and they see, oh my God, Bitcoin's up 300% this year, and then they pile into it. And I think that that's what drives it through that last part where it passes through this stock to flow intrinsic value. When it passes through that, those are the speculators that are driving it. There's something that has driven it in the past. I expect to see something similar play out because there's been literally no change to the protocol. So I kind of expect to see that dynamic just continue to play out through the future halving cycles until I guess it becomes global money. I'm expecting, this is how much I think this thing's going to move. I'm expecting 20,000 at the end of this year, 2020. I'm expecting 200,000 at the end, within the end of 2021 is my price prediction on Bitcoin. So we'll see what in the heck happens. I know that's a very absurdly bold call. I hope I'm right. Wish me luck. And if I'm wrong, make sure you throw as many stones as possible to my Twitter account.
Preston predicts Bitcoin to hit 20K by the end of 2020 and 100K by the end of 2021. We have a couple of months until the end of 2020 and we're just 6.5K away from his prediction. Next on the list are crypto billionaires Tyler and Cameron Winklevoss, who predicted Bitcoin price would rise to $500,000. The question in our mind is not so much does it get to 500,000, but how quickly, Tyler told during the October 23rd podcast episode. And last on our list today is the co-founder of Real Vision, Raoul Pal. Let's take a look at what he has to say about Bitcoin.
You said something to the effect that if you could own one asset for the next decade, it would be Bitcoin.
Yeah.
And I'd love to understand the rationale, the reasoning behind that.
Two things. So let's take that same 30-year-old and you've got 10 years, you're now in the stage where you start really trying to create wealth or save some money for future, retirement, whatever it may be, getting married, all that stuff. So you have an equity market, there's all-time high valuations. You have a fixed income market, yes, you can make money if you know what you're doing, but yields are low, so holding it for extended periods of time is not an option. Property markets are too expensive for anybody to afford, so what are you left with? Well, credit markets, well, you don't really get access to those anyway. They're more for professionals, and guess what? They're all-time record valuations as well. So you're stuck with everything that is normal at all-time record valuations. Right. So what are you left with? You've got commodities. Okay, so if you're looking at industrial commodities, well, you need to know what you're doing, because these things are massively cyclical and you can get killed in them. So then you're left with precious metals and Bitcoin that potentially have an upside that's different. Now, why is it different? Why is it important? Because, and I'm sure we'll talk a bit about this, is the environment that we're potentially going into with a massive wave of baby boomers retiring, with record debts, and governments are going to have to, and central banks are going to have to figure out how to stimulate economies, which are slow anyway, but when you've got this aging population, they don't spend money. If I look at my father's spending patterns after he retired, it probably fell 70%. Well, that's big for 76 million people in the US alone. So what happens is it slows down economies. There's too much debt for slow economies. It can become a problem. Central banks need to print more money to try and keep this thing going. And essentially it ends in complex outcomes. And we don't really know what those outcomes are, but usually they end up in some sort of massive loss of capital for a lot of people, or a transfer of capital and losses. So that kind of thing is interesting. We also know we've got a really screwed up financial system. It never really recovered from 2008. We've still got too much debt. We've still, the European banks are a problem. Canada's going to have problems with its banking sector because it lent too much to the property market. We've got problems on top of problems. We've got leverage on top of leverage. The world has never been more leveraged before. So how do you step outside of that? Right. And again, there's Bitcoin and gold. There's two obvious answers. Gold's largest future probably lies with other countries, just because so many countries have it intrinsically as part of their culture. So that's not going away. And yes, Indians will use digital currencies. They've already got this incredible digital payment system where you can pay with a fingerprint for a pint of milk. That's already happening in India. Still hold gold.
Right. So there is room for both in the future, absolutely. And that's what we try to tell people as well.
But when you say, okay, what is the risk reward upside? Well, Bitcoin's probably 50x, 100x. Well, gold maybe 5x, 10x.
His prediction is that Bitcoin will go up and will eventually hit 50 to 100x of the current price, which will come to $500,000 to $1 million. That's it for today. I hope you enjoyed the video. Let me know what is your own Bitcoin price prediction by the end of 2020 and 2021. Leave your thoughts in the comments below. I'll catch you later. Bye.